Hey there, Steve Rubis, the Fix-It IRO for Refikio Investor Relations. Today we're going to talk about the earnings call. Last week we had the opportunity to talk to a management team who asked the question, what is the optimal time to run their earnings call? To be honest, it caught us off guard. We've not thought about this question as an analyst or as an IR person, but when you think about it, it's really a very interesting question. And if you're going to do investor relations from a Wall Street perspective, we think there are four main considerations. The first consideration is, are you giving investors enough time to update their models? In this case, the company was printing at 4:15, call starting at 4:30. That's just not enough time to update a model and generate meaningful questions. Secondly, the biggest cardinal sin of investor relations is scheduling your investor call at the same time as a bellwether company in your industry or a competitor. What you're doing is just killing the analyst's bandwidth, and you can't expect to get solid engagement if that's what you're doing. Thirdly, always consider the West Coast investor. No one wants to have to get up at 4 in the morning to do an earnings call for a microcap company. Lastly, follow your industry protocols, which means if you're in technology, print at 4:05, do your call at 5. Otherwise, if you're in healthcare, maybe you do it in the morning or during the day. But again, just consider these four things. One, are you giving people enough time to update their models and generate questions? Two, are you scheduling at the same time as competitors or bellwether stocks? Three, are you thinking about the West Coast? And four, do what everybody else does. If you do this, you'll be in good shape. Thanks again. And at Refikio IR, if we work with you, we think your stock is worth more money. Thanks.